The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 16 January 2026. Well, this week I thought I'd do something a bit different. I've done for our members. I don't really do for the members all that often, but nonetheless, I want to look at the Commitment of Traders report. And as you can see, this is for futures only as of January 13th, a couple days back for silver. And there's lots of ways to look at this. I'm going to try to keep it simple. But if we look at the commercials here, we look at this box, and what we find is the commercials are both long and short. The short amount is 97,887 contracts short and 42,595 long. So you do a real simple math problem. I'll do it in my head. I'm going to take 97 minus 42. That comes out with 55,000. So we have 55,000 net short position. So if we do a little basic arithmetic and we take that 55,000, every contract is 5,000 ounces. We do that simple multiplication, and what we come out with is 275,000 ounces of silver. That's the number. Now, I'm not going to take into account what the spreading here, which is really 26,000, which is not quite half the 55,000, but this is very conservative. This is, in simple terms, it's really the contango. It's the delta between the present value of money and going out in the future. So it's a very safe way for the sophisticated bullion banks primarily. The other side can, the CMTs can do the same thing, but it's very conservative that, a month further out is higher price than the current month, and they capture that. So anyway, so you could say that 55,000, looking at that part of it, is less, but I'm not going to say that. I'm going to just use the 55,000. So we're talking 275,000 ounces of silver. All right, so we have our magic number. And so now we want to see how much is on the exchange. And here we go. That's what's on the exchange. Now, as most of you probably know, the registered is what the dealers have. The eligible, they can plug into some of it, but a lot of the eligible is not registered. It cannot be delivered immediately. It has to be signed. And the medallion available to be able to put it up for sale. So if you look at the total, it's 429 million ounces. The net short position is 275 million ounces. So if all of that were available for sale, and it's not, but if it were, you'd have more than enough to cover the net short position. 400, and I'll round it up, 430 million ounces, I think we all know from basic math, is greater than 275 million. If we just look at the total available, 120 million and change, it's not. It's about half as much. So 120 times doubled is 240. We're roughly 275, not counting the spreading, which kind of offsets it somewhat. So the idea that we're at 100 to 1 or 200 to 1 or 300 to 1 leverage just is not true. Now, a lot of people are going to say, well, I don't believe any numbers on the COMEX. I don't believe any of this stuff. So don't believe it. You don't have to believe it. I'm not going to make you believe anything. What I'm showing you is what's been posted. I think these numbers are accurate. Could there be some errors in here? Yeah, but probably in the 1 or 2% range. I don't think there's any real fudging going on in this. So I just want to point out that the exaggeration, misinformation, not understanding, whatever it is, as far as these numbers are concerned. So you've got maybe a 2 or 2.5 to 1 kind of leverage basis with the net short position from all the commercial traders versus what's actually available. And then we really don't know the net positions. And what I mean by that is they are, according to the data I'm showing you, the commercials are short 275 million ounces. But we don't know if they have any offsetting positions at the LBMA, which they could definitely have. So the net position, which is opaque to us, could be 120 million ounces. It could be just hedged exactly. I'm not saying that's what's going on. What I am saying is to be open-minded and to be truthful, that although we know this side, we know the COMEX side, the CME side, we don't know the LBMA side. And believe me, they do offset these things. Now, how much, I don't know. It could be net long for all we know. I'm not, again, saying that they are, but they could be. I mean, there was I think Asian AI guy said that JP Morgan had sold all their shorts or been told to get out of them, and they're net long now. Well, you look at this and say, come on, these commercial banks, JP Morgan's one of the primary ones. They're still net short. They've got to be short. And without seeing their exact books, we really don't know. But they could be short on paper at the CME and long because of offsetting trades at the LBMA or the Shanghai or Mumbai or in India or whatever. So I don't want to belabor the point. I just want to put a little bit of, I guess, throw some cold water on the idea that these, 100-to-1, super leveraged, they're billions underwater. These banks, believe it or not, as much as I'm not in favor of the bullion banking system, I just want to be honest about the whole situation. So I'm going to stop there. I'm going to show you an article I posted on X, and I'm going to close out this weekly perspective. All right, so let's wrap this up. I'm on my X here, and of course, it's at SilverGuru22, as you can see there. And scrolling down on what I posted this morning about an hour ago. This is from my friend Adam Hamilton, and it is an article from him. And there it is. So all you have to do is click that. I'm not going to read you the whole thing, but he does talk about the parabolic move and what the definition of the parabola is. There is the parabola right there. As you can see, it has been a nice big run almost straight up. So it gives you cautions about that. And I'm doing that as well with members of the Morgan Report. I'm giving them some ideas of how to prepare if it goes from the basically 100 we are now and it goes to 200. We have a plan. If it goes to 100, we have a plan. If it goes to 1,000. So again, I won't read this, but it is in a straight up move. Those parabolic moves don't last forever. They usually correct pretty hard. Are we there yet? I don't know. Could we go much higher? Yes. We are still in price discovery. There's still a delta between Shanghai and the New York, London markets. The arbitrage is available. Silver will move or is moving because of that delta. When will it be satisfied? We don't know. How much silver will it take to move? We don't know. We do know the market's tight and the physical demand is usurping anything else. So those are all facts to consider. Nonetheless, these type of moves are something to be cautious about. And the main thing is, for fiat or not for fiat, that may be the question. I certainly wouldn't sell everything. If we do go into true hyperinflation, which I doubt but cannot rule out, the last thing you want to do is sell any metal, really, because in a true hyperinflation, the currency becomes worthless, just like the Zimbabwe dollar or the Argentine peso or what have you, all the great destructions of currencies. Are we going to go there with the US dollar? Truly doubt it. I think the US dollar will always have some purchasing power, but certainly diminishing relative to silver. It lost 140% versus silver last year. Will it lose another 140% this year? Remains to be determined. The point being is that you don't want to get too greedy, and if you have some place to place that profit, which right now we are getting pretty strong in the oil sector, and I'm working with someone in that sector that's a specialist for the membership to basically do what I've taught, Mike Maloney has taught, many others, about not so much what's the price of an ounce of silver, but what does an ounce of silver buy? And the best buy right now is to buy platinum with your silver or to buy oil with your silver. Those two things are, I would consider, good buys right now, because the value of silver versus oil is at an extreme and the value of silver versus platinum is at an extreme. So you're using something well overvalued in that context and buying something undervalued in that context. So I'm going to leave it there. It's been 10 minutes. I'll be back with you next week with another weekly perspective. This is David Morgan of themorganreport.com.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't